Investors reveal their stock market secrets. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's look at this news.com.au article, which I suspect may be a paid advertisement. Let me know what you think after we've gone through it. Because investors reveal how they make money on the stock market, everyone. We've been looking at these discussions and pieces for some time. I remember back there was an ABC article where there were people who were just getting into the stock market for the first time. It was all about people being locked at home and using it as a way to make money. You know, almost doing day trading, which is challenging. Sure, some people can make money, but a lot of people, most of them, lose it, about 76%. And if you want to do it, you've got to treat it like a job. You've got to treat it like a proper job and put the time in. It isn't something you can pretty much phone home. Sure, you can get lucky, but if you want consistent returns, it takes work. So let's have a look. Let's look at these, how they make money and their secrets on the stock market. With many people losing their jobs during the pandemic, investing in the stock market could be another way to make some extra money. What do you reckon, everyone? Ever wondered how investors make money on the stock market? Sharon Connolly hedged her bets with a $25 investment at the age of 44 after having no experience on the stock market, and she's now sitting on $130,000 portfolio. Wow, so she turned $25 to $130,000. We'll have to see. We'll have to see about that. I remember there was one YouTuber I found, and she was talking all about dividend income, dividend investing, which is what I'm interested in, and I've got a goal to build up, just dividend passive income through dividends using pocket change. So my goal is just to use it, and when I say pocket change, I mean, money I got from selling some bottles, interest I got from a pile of cash I've got sitting there. All of this passive money that comes in, I'm just going to chuck it at dividend producing US stocks. The goal is I want to get $100 a month coming in. That's my goal for this year. And with all these little bits of money that will add up over some time, but aren't enough for me to really notice them. So if I lose it, I'm not too worried about it. That's my strategy for this year. And what was interesting was when I discovered this YouTuber, it was a couple of years ago now, I'm watching her stuff and she's talking all about her strategies, how she's making so much money from dividend investing here in Australia, so you get a regular income. And then she was talking about the phases in your life, the phase when you have children, and the phase when you're married, the phase this. So it kind of clicked. She'd gotten divorced. She'd gotten divorced and got a pile of cash in the settlement and plowed it into the stock market. So that was the way that she did it. So it's quite interesting because she said how she first invested when she was back at university. Then she didn't invest for like 30 years and then she went in. That's what it was. She got a divorce, got half the money, and then she's putting it in the market. So I thought that was quite interesting. So we'll have to see what other hints and tips. Get divorced and then put the money in the market. There you go. There's a free tip. So I use a high-level common sense approach, she said. Invest in what you know and research what you don't. I read the news, follow companies on LinkedIn, and have learned to read a simple balance sheet. Sometimes I dig a little deeper. For example, everyone is using Uber, but the company carries huge debts without a solid strategy forward. They're always one step away from being shut down by a regulator. That's not a long-term investment for me, but you can make some quick wins with Uber if you got in early, she explained. Well, you can make quick wins from Uber if you got in, right at the IPO. How's it doing now, though? It's not looking too good. Afterpay, if you got in the IPO there, that's doing well. I also believe it's handy to follow trends in order to see where some interesting opportunities lie. For example, when the pandemic hit, many organizations and enterprises adopted platforms like Zoom and Microsoft Teams to communicate with their teams and clients. So it was likely that these types of stock would go up. David Marcotti, a 30-year-old from Sydney, started investing in 2017 and has now grown his portfolio to over $65,000. The most successful investors and mentors I have ever had the privilege to speak to have always taught me that no one will ever be able to time the market. Investing is a marathon and not a sprint, he said. He's got a point there. Timing the market is difficult. It's challenging. dollar cost averaging, or DCA, is in my opinion the best way to minimize volatility risks and grow capital over time. This strategy prevents you from catching a falling knife or investing at all-time highs, he explained. I also spend a considerable amount of time every day reading the news and studying the markets in order to discover potential investment opportunities. Once he finds a potential stock that's worth investing in, he does a stress test of his idea. He asks himself questions like, why do I actually think this asset is going to outperform the S&P 500, and how does it fit in with my existing portfolio? He also has a play with a virtual account on platforms, here we go, like eToro, to tinker around with a mock portfolio without having to risk any real money. So is this the advertisement piece here that it's created? You know, we'll have to see. Source supplied, source iStock, source supplied, source supply, source supplied. I wonder. I just wonder. But then again, I mean, if you're interested in investing, it's best to practice on a pretend account. But then you can also, get lucky and then burn it. In reality, with investing, it's always making sure whatever you put in the market is something you can afford to lose. Don't go all in. The stories of people going all in on stuff and just getting burned, it's really depressing. It is. So he also checks in with other investors and friends to see what they think of the stock and where they see it going in the next year or so. Finally, he takes time to study the competition. Every company has competition. Think of Amazon versus eBay or Apple versus Samsung. Ask yourself why this particular company you have in mind is going to perform better than its competitors, as well as its expected growth projections in the next 5 to 10 years' time, he said. So Dylan Weston, a 27-year-old from Melbourne, managed to leave his day job to focus on the markets full-time. There you go. Leave your day job and just on the markets full-time. I've spent a great deal of time mastering my technical analysis and ability to read charts, he explains. What I like about TA is that within a few seconds of looking at a stock chart, you can instantly understand the short, medium, and long-term trends at hand. This can help you save time by narrowing down the companies that are in a healthy uptrend. Mr. Weston analyzes companies based on criteria before he makes a move. I often go back to my charts to determine a safe time to start investing in stocks, as well as identify where my options are to sell, he said. I believe smart investors should always know what is at risk and understand how much they can afford to lose before making any investment decisions. So there we have it, everyone. Stock market secrets and tips from 3 people just like you, and a sly reference to eToro. What do you reckon, everyone? Do you think this is a paid advertisement? Feels like it. It certainly does. Well, there are some, a few pieces of advice there. I don't think there's anything that would surprise most people. And I mean, how do you invest, everyone? Do you use one of these online platforms? Do you just go into a managed fund? Or do you just go into an ETF? What do you do? Let us know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. Support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I will see you all next time. Bye for now.